Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor, the Bank of America earnings. But we're also paying close attention to XRP. Bank of America is a very important stock to us, a very important business to us. It's a very important business to the economy, but also to the digital revolutionary crypto community as well. We now know that Bank of America, and Brian Martyn, CEO, mentioned it on the last call, that they are testing and using crypto. And it was very obvious they were talking about Ripple. Very exciting day today. If we should get a mention of Ripple or Bank of America on today's call, with everything else that's around the asset at the moment, we could see XRP going to $5. Not bad, right? So we did get a little tip off a couple of days ago. On the on CNBC, a friend of Brian Martyn's was on the show and saying how XRP was the preferred crypto to invest in over Bitcoin and Ethereum. That was great, and that got a little bit of a bounce in the asset. But if we get that to be mentioned today on the earnings call for Bank of America, whoop-de-doo, it's going to be great. So what am I doing? Well, I have limit orders all over the place. I am sharing that, of course, with my Electra members and my Discord members, because we have discovered an algorithm which plays against you. So we're playing it against itself. We have built a system where we can see what algos are doing. We can see how social media is affecting trades, and institutions and high frequency traders with fiber optic connections and AI data centers are front running you. They know what you want to buy, they know what you want to sell, and sell it back to you at a higher price. We see that happening now, and we can see when we do certain things and say certain things happen in the market. We can really see these patterns now. So I do not share my limit orders with anyone other than my Electra members and Discord. So it's a very small community. We have about 200 Electra members and about 200 Discord members. So a very small community of investors that want to know exactly what's going on. Now, it's only a couple of bucks. I don't make this expensive or anything. In fact, I make it as cheap as it could possibly be. You can't make Discord less than $2. So it's a couple of bucks to be a member of either of those. And it also provides a one-on-one service as well. I talk back to you. I answer your questions live. It's me, direct. It's a very small community, so I can answer everyone's questions. And that's the way I like it. I don't want millions of people joining. So if you want to be part of that, let me give you the links you need. You might already be a YouTube member, bronze and silver. You can upgrade from silver for a couple of bucks. There is the membership link. If you want to upgrade, go on the homepage of the channel, go to the membership tab, click on the right-hand side. You'll see upgrade. You can upgrade, downgrade whenever you want to, and that will get you all of my buy orders, limit orders, and I will be sharing it all with you. Or you might prefer to go even deeper. Of course, that includes all the other benefits that YouTube gives you, all the CEO interviews. I reply to all your comments on YouTube, members-only live streams, all these things. But we go one step further. We also have Discord. Now, Discord, there is the link for Discord. When you click on Discord, it's a bit confusing. I know Discord can be confusing. There is a join server right in the center. This shows you nothing. This is where the guests come in, and you've only got a welcome channel. There's nothing there to see, because if we have information in the join server section here, there'd be millions of bots, trolls, scammers joining, and it would be a chaotic service. We don't want that. We have just a couple hundred people, 249 members. What you do is you scroll down and you purchase for $2.99. If you know anything about Discord, you'll know you've never seen a Discord server that inexpensive. It's because I make money from investing and I give it to you, all right? Where other people, they make money from training courses, make money from all these services. I give it to you for a couple of bucks, all right? So it tells you what to do there. If you just read it, The service you must purchase for $2.99. This join server will bring you to a welcome screen just telling you there's nothing there, and it tells you all here if you just read it. And every now and again I kick the people out of here just to keep the numbers down anyway, so you might be in for a few minutes to see what's going on, like a free trial if you like, but after a few minutes or an hour or so you get removed anyway because there's nothing in there. We don't want millions of people clogging up the system, so that's how you do it. Right, we got 25 minutes to go before Bank of America earnings this morning. We can tell you, of course, it was a very small beat. Let me just refresh the screen and get all the details up again. But it's not about whether Bank of America beat today. I mean, that's important for the market. It is a reasonable beat, actually. It is. I can give you the exact number. They were expecting 96 a share. It was 98 a share. So it's okay. Bank of America has beaten on earnings, but it's not a massive beat at all. What we want to know is how they are affecting their payment systems with using Ripple. That's what we're interested in. So here is Bank of America's chart on, oops, wrong one. There we go. Bank of America on the screen there. Let me just share that with you so you can see it nice and clearly of the current price. But the event itself is where's it gone? Here we go. All right, there you go. There is the earnings call. I apologize, it's a white flary look today, but it is. So there it is. Let me make sure the audio is working. They probably aren't playing anything yet. Let's have a look. Yes, we're getting audio. That's great. So Brian Mernhan of the team will be live on Bank of America, and let's hope we do get something around a Ripple, XRP, and the like. All right, so there we go. An exciting day for XRP investors, Ripple investors, SMP investors, bank investors, finance investors. I'm in the process of becoming accredited so I can actually buy Ripple itself, which is where I see the real money being made. But I am in XRP as well itself. So we've got 24 minutes to go before the call begins. So we've got a bit of time. So we can answer a few questions and we can be here for everybody. I hope you're all well. Now, what we'd like you to do, this is a major event in the crypto space. If we can ask you to consider subscribing, you'd like to join us on our journey to 1 million subscribers. We will be there within 2 years, 500,000 this year. We're growing faster and faster. In fact, we're doubling our rate of growth every month. Would you like to join the army? Let's have a little look. 109,088. We're on the road. So if you subscribe now, perhaps today we could get to 110,000 today. That would be absolutely wonderful. We are on track for 500,000 this year and 1 billion in 13 years. We're growing faster than Mr. Beast did to 100,000. In fact, we've done 9% of our growth in 4 years in the last couple of months. So that's how fast we are growing at the moment, which is absolutely wonderful. So join us, be part of it. The other thing I'd like you to do is if you can tap the like button, it shares it out to more people so they are aware of the stream today. So we're going to have a little bit of fun right now. You know the game we like to play. So are you ready? Let's do it. We're starting off with 47 likes. That's rubbish. So what we're going to do is put 1 minute on the clock and see if we can get 100 likes in 1 minute. And by tapping the like button, it shares it out to more people. Good news for Bank of America and XRP. Why wouldn't you? So you ready? In 5, 4, 3, 2, 1, let's go. Tap the like button. And don't forget, if you do, as always, it makes the little fellas happy. There they are. They're the little fellas. There they are, wagging their tails. If you tap the like button, they love it, love it, love it. There you go. So we start at 47. We've got 1 minute on the clock. We want 100 likes. Bank of America, XRP, Ripple day today. Let's have a look where we are now. We are now at, bloody hell, that was quick. 102 in 1 second. Well, that's never happened before. So in that case, then, that was just too easy. That was too easy. Let's make it 120 in the next 30 seconds. That was just too easy. All right, we can't have it that easy. 120 in 30 seconds. Are you ready? Let's count it down. Share this out to the world. What's going on today? Let's have a look. 120 and in 30 seconds. 119. Oh my gosh, this is becoming too easy. I'm going to have to upgrade this. This is mental. 119. Let's refresh it. I mean, should I make it 1,000? I mean, what do you want? I mean, what do you want? All right. 120. Are we going to do it? If we've done it, we'll carry on. 124. We've done it. What a great morning that is. Woo-woo. Marvellous. Thank you very much indeed. Let's fade the music out. That was too easy. I can see we've got the army in this morning, so which is great. In that case, I think you deserve a treat. You deserve a treat. We've got 20 minutes to go. We've got the most passionate, most committed, dedicated XRP investors in the world here. We don't have just some army that's like a paper army that falls over. These are the real investors. So you know what? You know what? I'll give you a little treat. You deserve it. Here it comes, the top song in the world. It's the most famous song in the world. In fact, you could make it the most famous song in the world for XRP. Anybody want to know what that is? Well, let me bring this up. XRP. I think we should do this. I think it would be great. I think we should. All right, let me bring this up. Okay, I'll put it on the screen for you. And I'm going to give everyone, hang on, I'm going to give everyone the link to this. You can all do it now because we've got 20 minutes. It's 2.5 minutes long. What am I talking about? I want every single person, because you've got 20 minutes, 20 minutes. If you love XRP and you want the world to know about XRP, I mean, seriously, okay? I'm going to give you, let me refresh that. I'm going to give you this. Okay, here we go. XRP song. Whoops. Song. Make it viral. Hang on. Viral now. You have time right now. Okay, you ready? Okay. Oh, bugger me. Why is that coming up like that? That's not right. I don't want that. We don't want that. We don't want that. I've got to do this again. I broke it. I broke my own thing. So let me pop this out. Pop out the chat. All right, I'll do that again. Okay. I'm going to give you the XRP official, unofficial song. The unofficial one's better than the official one anyway. More people watch it. All right, and share it. That's a fact. That's a fact. So here we go. So XRP song. Whoops. Make it viral now. You have time right now. Okay, push that there. Right, there you go. So let me click on this. Replace the pin. So this is a little glimpse. This is a little glimpse of it. What I want you to do, this is the XRP song. And it didn't play. Believe in your flow. Oh my gosh. Let's do that again. That was rubbish. XRP. That's better. Always believe in your flow. You've got the strength that we know. Absolutely, the proper XRP song. We're loving it, loving it, loving it. It's got a proper video. I've made a pop video. So if you want the XRP song to go viral right now, I've given you the link in the chat. The Bank of America earnings call starts in 15 minutes. It's only 3 minutes long. Now, what I need you to do to make this go viral, this is the XRP song with all the words all about XRP, all right, and what it really means. I've given you the link. What I want you to do is go on this video. Thank you for the chain. Built for speed, not just for fame. There it is. This is the XRP song. I want you to watch it all the way through, because if you only watch part of it, YouTube won't show it out. I don't make any money from this. If I did make any money, I'd buy XRP with it anyway. But what I want you to do is watch it all the way through. It's only 3 minutes long. That way it doesn't damage the video. If you only watch it for 10 seconds, YouTube thinks this is rubbish and won't share it out. So watch it for 3 minutes, come straight back to me. And what I want you to do is leave a like and share it on your social media. XRP, always believe in the flow. Do you want to see a little clip? No, you're unstoppable. XRP. XRP, you can't beat it, right? So everyone, you've got plenty of time. You've got time to watch it 3 or 4 times, if I'm honest. All right, we've got 15 minutes before Bank of America earnings starts. Go and click on this. It's pinned to the top. I've dropped it in the chat several times. Click on it, like it, share it, and I want to see it. I want to see it appear in everyone's social media. And if you tag me in it, at Martyn Investor on X, I will repost it so you get famous on your X account. So more people will see your X account, all right? So if you want to blow up your own X account and you want to blow up XRP, go and share it, stick it everywhere. And if you tag me in it at Martyn Investor, or at Martyn Lucas, because my musical channel, I will repost everyone that tags it in and help you blow up on X, all right? Ripple never bends, all right? So there you go. You got time. We're going to come back to the earnings right now. XRP, always believe in your cause. There you go. There it is. I shall leave that with you. You've got time to do it. I'm going to let that play all the way through. I don't want to ruin it, of course. So anyway, and if you watch it all the way through, you even get a dance break. Yeah, I know you don't want to see me dance, but you even get a dance break. All right. So anyway, has everyone done it? See, you're doing it at the same time as me. That's all it takes, 3 minutes. All right. Okay. And when you've done it, put in the chat, I made XRP viral today. I played my part in making X. Oh, there's a dance break. I mean, really? Seriously? Does it get better than that? All right, there you go. There's XRP. I'll let it play all the way through. I don't want to stop that. All right, so give it a like, share it. Let me know you've done it, and let's get into it. Right, okay, so we are 15 minutes away from Bank of America earnings call. I'm letting that video, see, it's playing all the way through. I'm not going to stop it. I'm not going to stop it. Make sure it plays all the way through. Bank of America selling off this morning on a slight earnings, but we're not bothered about that. We want to know whether they talk all about XRP today. That's what they mentioned Ripple today on the call. That's what we care about this morning. All right. So, has everyone tapped the like button? Have you all subscribed? Good stuff. All right. Have you all watched the XRP video? Have you all made it? Have you all made it viral yet? All right. Have you all made it viral? All right, I hope so. There's the cheat sheet for the newsletter. Just coming to the end now. That's all it took. That's all it took. A couple of seconds there, and you promoted XRP everywhere. How about that? XRP. Not bad, eh? I told you I'd watch it to the end. All right, that's all it takes to get involved and play your part in the XRP real army. The army that actually do stuff, not just sit around in Reddit rooms talking nonsense, dumping it on each other. We are here to help people. Okay, so what comes next? We've got 13 minutes to go. I've just dropped in the newsletter for you in the chat if you want the cheat sheet and follow along today with the show. I'm going to break it all down in a moment. We've got time to read through the XRP news of the morning before the event starts. So Sensei is still live. Sensei is doing PPI inflation data this morning, and once he's finished, he'll be sending everyone to me once he's completed his show. But he's doing there we go. Look at this. 109,093 on the way to 110 today. So let me break down the news in our newsletter. If you've not got it this morning, you can get it and follow along. Let me refresh that. Bank of America looking good. Right. So let me break it down. Let me break down all our news for you. Here we go. Make sure we're good there. What an exciting morning. Okay. Okay, in very interesting inflation data. Could be a very volatile day today. The Fed's preferred metric. I'm keeping my eye on that. So let's get into our deep dive. You ready? Okay, so welcome to the show. So Bank of America, XRP. tokenized settlement, real-time liquidity. This is what it's all about. Hodl, 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 says our little XRP tokens. Don't get too emotionally attached. They don't know you exist. Important to say that. People forget that sometimes. It's a fan club. No, this is an investors community here. Bank of America earnings. The XRP RLUSD, a Ripple wildcard. Bank of America enters today's earnings call at a moment when legacy banking rails are quietly being rebuilt behind the scenes. With ISO 20022, let's call it that, now live across US payment infrastructure and regulatory pressure around Ripple largely resolved, attention is shifting from if blockchain rails will be used by tier 1 banks to how far along they already are. For XRP holders, this call matters for one reason: confirmation. Bank of America holds one of the largest blockchain and Ripple-related patent portfolios among US banks and has long been linked to Ripple infrastructure at the plumbing level. The market isn't expecting a headline announcement, but even a the market isn't expecting a headline announcement, but even a single operational reference could change sentiment fast. It could, and we believe if it is mentioned and is spoken about, we can see XRP very quickly going to $5. Could that happen this morning? Well, you'll find out in 10 minutes. Of course, there won't be too much excitement until the questions at the end. It's the Q&A at the press conference at the end when somebody could ask the question. Maybe it'll be me. Maybe I'll call in. I'm only joking. I can't call in today. I have been on earnings calls, but I won't be on today's earnings call. All right, you have to book an appointment for that. Okay, so XRP, RLUSD, and the liquidity stack. Ripple's model separates stability from liquidity. RLUSD as the regulated dollar-denominated settlement asset. XRP acts as the real-time bridge for cross-currency liquidity via on-demand liquidity. For a bank like Bank of America, this structure solves a decade-old problem, tying up capital. Is that correct? Tying up, I beg your pardon, tying up capital in pre-funded foreign accounts instead of parking money globally. Liquidity can be sourced on demand in seconds. That is no longer theoretical. ISO 20022 compatibility removed the final technical barrier between traditional bank systems and tokenized settlement rails. 8 minutes to go. Why this earnings call matters. If XRP, Ripple, tokenized deposits or real-time settlement are mentioned, if any operational or efficiency context, XRP likely explodes. Not because retail suddenly believes again, but because markets would interpret it as confirmation XRP is moving from pilot infrastructure to production plumbing inside a US systemically important bank. That changes valuation models instantly. Even a vague phrase like digital liquidity rails, tokenized settlement, or real-time cross-border efficiency would be enough to trigger aggressive repricing. The Semtic trade right now, XRP is priced as a speculative asset with improving regulatory clarity. It is not priced as an active liquidity component inside our top tier US bank. That gap is the opportunity. If there is no mention, the market shrugs and moves on. If there is a mention, XRP does not drift, it gaps. This earnings call is not about guidance, it's about language. Bank of America does not need to announce XRP. It only needs to acknowledge the rails. And if it does, XRP will not wait for confirmation twice. Good luck. So there you go. There is our bit of information from the newsletter this morning, plus much, much more. Would you like the chart? Of course you would. Do you want the chart of the day? Have we got time? Have we got time? I tell you what, we got 179 likes. Make it 200 likes and I'll give you the chart of the day, what you might expect. And of course, my Electrum members all know my limit orders and my Discord members know my limit orders. There is the membership link. If you are a member, you can upgrade to Electrum for a couple of bucks from silver or consider becoming an Electrum member straight off the bat. There is the link. If you like my Discord and you want my buy orders, sell orders, limit orders, my trades, my live action, and you want one-on-one service, there is Discord. Remember, never accept a friend request from me. It's not me. You send them to me. Anyone does is a scammer. All right? There's always somebody scamming somebody somewhere. Do not accept friend requests from anyone called Martyn Lucas. I do not send them ever. Okay, so 200 likes, need 10 more likes, and I will give you the chart of the day. 5 more likes, 195. We've got 5 minutes before Bank of America earnings call. Come on, everybody. And we've got inflation around the corner as well. So we know what's happening there. If we go over to my portfolio, I'm slightly down. I'm buying Coca-Cola. I've got buy orders for Coca-Cola. I'm out of the S&P 500. We're looking at inflation this morning. We're not worried about it, but we are focusing on it this morning. Let me have a look here. Let's go on to XRP. Where is me XRP? Well, I'm on the wrong bloody screen here. XRP. There we go. XRP there. Did we get 200? We did. Have we got time? We got exactly 5 minutes. All right. So here's the chart of the day. If you want the newsletter, here it is. There's a newsletter in the chat as well for you. You can get this for free right now. Chart of the day, XRP. XRP has demonstrated resilience by bouncing between the anticipated technical levels. Current price action suggests a solid foundation has formed between the Fibonacci level of 205 and 208, which appear to be serving as a strong bottom. Traders are now monitoring the 208 level as the primary support, while a retest of that level is possible. The immediate momentum is shifting toward the upside. Oh, we got time? We've got time. The primary objective of the current move is in the 230 resistance level. If XRP can establish a hold above 230, it could open the path toward higher targets. Specifically $2.60. Conversely, if the 210 support fails to hold, the focus would likely shift towards the $2 as the next significant area of interest. The successful defense of the Fibonacci range suggests a potential continuation toward the near-term target. There are all our positions shared for you. Go and enjoy those. We've really got to go now, though, because we are coming up to just a few minutes to go before we get into the call. All right, there'll be more from our newsletter shortly. There's much more in our newsletter today, but we'll bring it to you if we've got time after the earnings call. But the earnings call now is 3 minutes away. We are here to listen to the Bank of America earnings and hear if they mention anything to do with online payments, digital rails, crypto, XRP, Ripple, any of these things. We'll be listening in intently. All right, 3 minutes ago. Now, if you've joined me for an earnings call before, you will know that the earnings call may be 1 or 2 minutes late. Let me have a quick sip of my tea. Okay. So, 3 minutes to go. I'm going to put Bank of America on the screen. At the moment, we are selling off. I'm going to refresh the earnings information. Make sure we got it. Click play. There's the music. You can hear that. So in a moment, I shall mute this. In fact, I'll do it now. There we go. I can hear it. You can't, just so I make sure that we don't get copyright on the music. Oh, there we go. There it is. That's the Bank of America earnings. When we get there, we'll bring it to you, but we'll also focus on the price, XRP, and everything else around it. So stand by for XRP earnings. We are on it like a car bonnet. So don't you go anywhere. All right. So Bank of America, XRP, my portfolio, what's happening with Coca-Cola? Let's keep our eye on all of this, shall we? So we're just a few moments ago. There will be no movement of XRP until and if there is a mention of Ripple and so on and so forth. So don't get too excited for the first few minutes. This will be about an hour before we get to the conference. There may be mentions of it. You just don't know. That's why we need to be here. So all tap the like button. Consider subscribing. If you want to follow me on X and Instagram, if you want free shares of Robinhood, there's Robinhood USA. If you want free shares of Robinhood UK, they're about to get an ISA. There's free shares of Robinhood UK. There's Discord if you want to join that. Remember, don't accept a friend request from me. It's not me. And there is the membership link if you want all my trades and setups for all my positions. Everything I share with you and a one-on-one service. All right. I'm just going to move that to there. I don't know why. I just got this funny feeling I want it over there now. All right, there you go. So 1 minute to go. There could be a slight delay, of course. There's XRP. We're about to get the inflation numbers as well. We'll actually get inflation numbers before we get the call. So PPI, producers' prices.
Anytime, please press *0, and a member of our team will be happy to help you.
There you go, a little pre-announcement. Inflation is 20 seconds away. Looks like Bank of America are going to be on time, which is lovely. Always helps. So PPI was 0.3. Producer price index 0.3. If it goes up, inflation's gone up. The market won't like it. My Coca-Cola will love it. All right, and crypto won't like it either. By the way, it means there's no rate cuts coming, which I don't think there will be more than one anyway. So here we go. It's time for the call to begin. PPI has come in. Retail sales is up. People are spending money. The bank will like that. That's up 0.6 from 0.4. PPI is at 0.3, and we're waiting for the number. Core PPI month on month is 0.1. We're waiting for the new number. That's previous. We're waiting for Bank of America any second now. We're on standby. I'm listening in. PPI month on month is 0.2. It's gone up. On the month, it's gone up. The PPI month on month has gone up. PPI on the month has gone down. Month on month, October is down 0.1.
Again.
So PPI on the month October was 0.1. The month on month of November was 0.2.
Welcome everyone joining today's Bank of America earnings announcement. At this time, all participants are in a listen-only mode. Please note this call is being recorded. We're standing by if you should need any assistance. It is now my pleasure to turn the meeting over to Lee McIntyre. Please go ahead.
Thank you, Leo. Good morning. Our fourth quarter results. During the quarter, we elected to change the accounting method related to our tax-related equity investments in order to better align our financial statement presentation with the economic and financial impact of those investments. As a result, we filed an 8K on January the 6th and a related mini supplemental package recasting the numbers for the quarters of 2024 and 2025 and the full year of 23 and 24. The primary impact of the accounting change was a reclassification between the income statement line items in our income statement, which had an insignificant impact on net income. Our discussion today is based on those recast numbers. As usual, our earnings release documents are available on the Investor Relations section of the bankofamerica.com website. Those documents include the earnings presentation that we will make reference to during the call. Brian Moynihan will make some brief comments before turning the call over to Alistair Borthwick, our CFO, to discuss more of the details in the quarter. Let me remind you that we may make forward-looking statements and refer to non-GAAP financial measures during the call. Forward-looking statements are based on management's current expectations and assumptions that are subject to risk and uncertainties. Factors that may cause our actual results to materially differ from expectations are detailed in our earnings materials and SEC filings available on our website. Information about non-GAAP financial measures, including reconciliations to U.S. GAAP, can also be found in our earnings materials and are available on our website. With that, Brian, I'll pass over to you.
Thank you, Lee, and good morning, and thank you for joining us. This morning, Bank of America reported net income of $7.6 billion for the fourth quarter. That is up 12% from the fourth quarter of 2024. Our EPS was 98 cents per share. That's an increase of 18% from the fourth quarter of 24. We delivered 7% year-over-year revenue growth. This was led by a 10% improvement in net interest income, up to $15.9 billion on an FTE basis. For net interest income, we have delivered each quarter what we laid out across the year and finished a bit stronger than we expected. We grew average loans 8%. We grew average deposits 3%. We delivered 330 basis points of operating leverage in quarter four through continuing disciplined expense management. Alistair will take you through the details of the quarter, but first I want to highlight a few things about 2025 to close the year out. I'm working off of slide 2 in the earnings presentation. Our fourth quarter topped off a strong performance by my teammates at Bank of America for 2025. We delivered on our commitments to shareholders across the year with solid growth across revenue, earnings, and returns. We drove operating leverage and continued robust investments in people, brand, technology, and both our physical and digital networks. Those results reflect the power of our diversified business model and our commitment to drive responsible growth. Some highlights of 2025 you can see here. Revenue was a little over $113 billion, was up 7% year over year. We generated 250 basis points of operating leverage for the year. Asset quality was strong and net charge-offs improved from 2024. We grew net income year over year by 13%. In addition, we grew EPS year over year to $3.81 or by 19%. We also increased our profitability and returns during the year. Return on tangible common equity improved 128 basis points. Our return on assets improved to 89 basis points. Our results and prudent balance sheet management allowed us to distribute 41% more in capital back to shareholders, more than $30 billion. We grew loans 8% and we grew deposits 3%. Loans outpaced the industry and average deposits now have grown for the 10th consecutive quarter. Our focus on all the markets we serve, whether they're domestic or international, has allowed us to grow our client balances at a faster pace than the industry. Dean described how we do this in the U.S. at our Investor Day, and we will cover it later in the program. As you look to slide 3, we've also highlighted some organic growth highlights for the year and the quarter. We grew net new consumer checking accounts by 680,000 during the year, and that's while maintaining a strong average balance of $9,000 plus. This extended our consecutive quarterly net growth to 28 or 7 years straight. We crossed over $6.5 trillion in client balances of investments, deposits, and loans across wealth and consumer banking. Our consumer investment totals reached $600 billion. Similarly, our workplace benefits totals, i.e. 401k balances and related balances, crossed over $600 billion also. It's worth noting that $28 billion of our year-over-year loan growth came through our wealth management clients. Global Wealth Investment Management showed improved nominal profit growth, stronger pre-tax margin improvement, and continued to draw net new assets with a combined consumer of $100 billion during the year. In global banking, average deposits increased $71 billion, up 13%. We saw Treasury service fees increase 13% over 24. And ending loans grew across each line of business year over year. Good core customer organic growth driving that. Investment banking saw good activity. For the full year, our investment banking fees were the highest they've been since going back to 2020 in the outside pandemic period recovery. They were 7% higher than the prior year. Fees generated in the second half of 2025 were 25% greater than the first half. What did this show? It showed good momentum by our team. It also showed that our corporate commercial clients settled in during the year after tax policy became clear, tariffs became more understood, and they look forward and receive the benefits of deregulation. Global markets, under Jimmy's leadership, saw continued growth in sales and trading with its 15th consecutive quarter of improvement and drove a record year of nearly $21 billion in sales and trading revenue. In addition to these stats, I commend you to review slides 21, 23, and 25. Those highlight the continued progress of digital deployment and activation statistics for each of our businesses. You should note there the impact of Zelle in the continued usage growth, and also note the impact of Erica, our AI agent, and its use both across our businesses and with our teammates.
Cracks are forming in the S&P now.
High-level comments of what we see in the economy.
It's right to be in Coca-Cola. All my posts are on my Discord, and my all of my buy orders are all in my Discord and Electra members posts.
Account balances in consumer business for that broad base.
You didn't like the inflation numbers?
Were stable through the year. Delinquencies
Our portfolio is great.
Improved in 2025 consumer credit. Unemployment in the market remains stable, and the equity market appreciation benefit those consumers or investors in our Merrill Edge products or in our 401k platforms. This strong consumer health bodes well for a continued improvement in growth in 2026. When you go to our corporate commercial customers, again, as the tax law settled in, the tariffs appeared to be manageable, and deregulation kicked in, they had a pretty good year and good profits, including good credit quality and good money movement activity as we move through the year as they participate in the world economy. A world-class research team has the global growth rate for GDP at 3.4% in 2026 and U.S. at 2.6%. Risks remain out there. They always do. But we're encouraged and constructive on the year ahead. I'll turn it over to Alistair to cover the quarter.
Thank you, Brian. I'll start using slide 4. And as Brian noted, the fourth quarter was a strong quarter for us with 7% year-over-year revenue growth and good operating leverage, producing $7.6 billion in net income or 98 cents in earnings per share. Our EPS grew 18% compared to the fourth quarter of 24. Net interest income of $15.9 billion on a fully taxable equivalent basis was strong and a little better than expected, and we saw good momentum from market-based fees that complemented the NII growth. Of the $28.4 billion in total revenue, $10.4 billion came from sales and trading, investment banking, and asset management fees. And those are three of the more highly compensable market-facing areas. It's these areas that grew revenue 10% year over year in the aggregate. On expense, teams have shown good discipline across the businesses as we held headcount flat across the year, despite the volume growth of clients and activity. Most of the year-over-year expense growth was a result of revenue-related growth in markets and wealth-based activities I just described, and our continued investments in the franchise. We saw productivity improvements through AI and digitalization more generally, and those enabled us to add client-facing associates as we eliminated work and roles in our operational support areas. This year, we brought another 2,000 college graduates into the company, and we remain an employer of choice with progressive benefit programs for our employees. And even with those additions, we managed to hold our headcount flat for the year through good management. Provision and net charge-offs declined year over year. That's for a second straight quarter, driven by continued stabilization around credit card and lower losses in commercial real estate. The net charge-off ratio fell to 44 basis points and is down 10 basis points year over year. And lastly, we reduced our average diluted share count by about 300 million shares, or 4% from the fourth quarter of 24. Slide 5 highlights the various earnings points that Brian and I have covered to this point. So let's transfer to discussion of the balance sheet using slide 6, where you see total assets ended the quarter at $3.4 trillion, little change from Q3, as securities and cash reductions were replaced with loan growth. Deposits grew $17 billion from Q3, and we used those deposits to continue to reduce wholesale funding as part of the plan we've discussed previously to intentionally lower balances and drive a more efficient balance sheet. Average global liquidity sources of $975 billion remain very strong. Shareholders' equity of $303 billion was up less than $1 billion, as earnings and a modest increase in OCI was mostly offset by capital returned to shareholders. In the quarter, we returned $8.4 billion of capital back to shareholders, with $2.1 billion in common dividends paid and $6.3 billion of shares repurchased. The $1 billion increase in share repurchase from Q3 reflects increased earnings over the past 6 months and some reduction in excess capital. Tangible book value per share of $28.73 rose 9% from the fourth quarter of 24. Turning to regulatory capital, our CET1 level increased modestly to $201 billion, driven by a $2.1 billion capital reduction from making the tax equity investment accounting change in the period, and we were not required to restate prior period regulatory capital. That capital reduction reflects the timing of equity and profitability in those investment deals and comes back into our capital over the next several years as those deals wind down. That accounted for roughly 12 basis points of CET1 reduction in the quarter, again, that we'll get back over time. Risk-weighted assets rose $22 billion from Q3, driven by loan growth. Our CET1 ratio then declined from 11.6% to 11.4%, and it remains well above our 10% regulatory required minimum. Our supplemental leverage ratio was 5.7% versus a minimum requirement of 5% as of December 31st, and 3.75% under the new rule, which we are adopting starting in 2026. This leaves ample capacity for balance sheet growth, and our $467 billion of TLAC means our TLAC ratio remained comfortably above our requirements. On slide 11, we show trend of average deposits and the consecutive growth across those periods. Average deposits were up nearly 3% from the fourth quarter of 24, driven largely by commercial client activity. Global Banking grew average deposits $74 billion, or 13% compared to the fourth quarter 24. Our global capabilities, innovative solutions, and our relationship managers continue to offer clients value and access to our award-winning digital platform, CashPro. Consumer Banking reported its third consecutive quarter of year-over-year growth, and low and no-interest checking was up $9 billion, or 2%. Importantly, ending deposits improved sequentially in every segment. The team also showed continued discipline on pricing while achieving that growth. Overall rate paid on total deposits of 163 basis points declined 15 basis points from Q3, reflecting lower rates and disciplined actions in our Global Banking and Wealth Management businesses. Global Banking and Wealth Management rate paid both declined 28 basis points from Q3. The rate paid on the roughly $945 billion of consumer deposits fell 3 basis points to 55 basis points in Q4 and remains low, driven by the operating nature of that account base and that client base.
The cracks are forming in the S&P.
By looking at average balances on slide 8.
The crash is coming.
Loans in
We're
Q4
right to be in
of
Coca-Cola.
$1.17 trillion, improved $90 billion, or 8% year over year, driven by 12% commercial loan growth. Consumer loans grew at a slower 4% year over year pace, and importantly, were up across every loan category of card, mortgage, auto, and home equity. For the fifth quarter in a row, every business segment recorded higher average loans on a year-over-year basis. While commercial loan growth has been driven by our Global Markets Group, we've also seen year-over-year growth of 3% in Global Banking and strong custom lending growth of $18 billion year-over-year in Wealth Management, as affluent clients borrowed for investments in assets like hospitality, sports, yachts, arts, and business. In addition, small business saw its 12th straight quarter of year-over-year lending growth. Let's turn our focus to NII on slide 9, where on a GAAP non-FTE basis, NII in Q4 was $15.8 billion. And on a fully taxable equivalent basis, NII was $15.9 billion. And as I said earlier, that's up 10% from the fourth quarter of 24. On a fully taxable equivalent basis, NII grew 1.4 billion year over year and 528 million over the third quarter. Our growth was driven by several factors. First, we saw good core NII performance from loan and deposit growth and disciplined pricing. Second, we benefited from asset repricing as higher yielding loan growth replaced loan and security maturities and paydowns. Third, client activity in global markets drove more of the sales and trading growth through NII than fees this quarter compared to Q3. Now that was about
this is great for investors. The S&P is cracking now. We knew this was coming.
MMSA, and we had
I'll be buying more XRP and more Coca-Cola.
And lastly, we had
all my trades are on Discord Premium and
primarily impact our liabilities dropping
on
more
Electrum memberships. If you want all that, plus one-on-one support, it's only a couple of bucks.
Assets, so we had a slight
Here's all the links.
Our net interest yield, NIY, improved 7 basis points from the third quarter to 208 basis points, reflecting the growth in NII, while the earning balance remained stable as higher-yielding loan balances replaced lower-yielding securities. And as I said earlier, higher deposits allowed us to reduce wholesale funding while cash balances declined. Regarding interest rate sensitivity, on a dynamic deposit basis, we provide a 12-month change in NII for an instantaneous shift in the curve. That means interest rates would have to move instantaneously lower by another 100 basis points more than the 2 expected cuts contemplated in the curve. On that basis, a 100 basis point decline would decrease NII growth over the next 12 months by 2 billion. And if rates went up 100 basis points, NII growth would benefit additionally by approximately 700 million. With regard to a forward view of NII, let me give you a few thoughts. At Investor Day in November, we indicated our expectation that we would see 5 to 7% growth in net interest income in 2026 compared to 2025. And that's still our belief today based on the latest interest rate curve, which includes 2 rate cuts in 2026. To reiterate our expectation from Investor Day, we expect good core NII performance from loan and deposit growth that will additionally benefit from sizable fixed asset repricing and cash flow swap repricing to drive the 5 to 7% NII improvement. During 2026, we expect roughly $12 to $15 billion in combined mortgage-backed securities and mortgage loans to roll off quarterly.
Limit orders placed with Bank of America, details in my Discord Premium and Electrum members.
Expensive short-term debt. For Q1 NII expectations, I would use Q4 as a base after excluding about 100 million or so for the shift in global markets client activity that I referenced. That is likely to be offset in MMSA, so simply a change in geography that's revenue neutral. I'd also note we have 2 less days of interest in Q1 than Q4, and of course we had a 25 basis point rate cut in December. Still, we expect Q1 NII will grow roughly 7% from Q1 25 based on the assumptions on slide 18, in line with our full year guidance. Okay, so let's turn to expense and we'll use slide 10 for our discussion. This quarter, we reported 17.4 billion in expense, up a little less than 4% year over year. When combined with our 7% revenue growth, this good expense management allowed us to generate more than 300 basis points of operating leverage, and that aligns to our target for the medium-term operating leverage range that we conveyed at Investor Day. The increase in expense was mainly driven by incentives tied to revenue growth and higher brokerage, clearing, and exchange costs, or BCE costs, from trading activity. Those BC&E costs reflect client activity shifting toward higher growth and higher transaction cost overseas markets. Now, these costs are the ones that are generally reimbursed by the client, so they're included in our revenue and essentially offset one another. If we isolate change in expense for the incentives tied to wealth management, and remember, That reflects a 13% year-over-year improvement in asset management fees. And we isolate the BC&E costs that supported a 10% increase in sales and trading revenue. Then combined, they represented roughly 2% of our expense growth for the year, and they came with good revenue. Beyond that, productivity improvements from AI and digitalization continued to help offset higher wages, benefits, and technology investments. Headcount remains our key driver of expense, from compensation and benefits to real estate and technology. And we manage this closely, not only in total numbers, but also in organizational structure, aiming to strike the right balance of managers and teammates. Since the end of 2023, we've operated within a tight range of 213,000 employees. This year, we hired about 17,000 new teammates just to replace departures from what was a very low attrition rate. And every time someone leaves, we take the opportunity to evaluate whether the
market cracking with the inflation numbers.
Compared to the third quarter,
this is what we want.
Non-interest expense was up about $100 million.
Looking to buy more Coca-Cola and XRP. I will share my trades with everybody.
Costs. That was
I will share them with Electrum and Discord.
$200 million net benefit from the combined impact of the reduction of the FDIC special assessment accrual and some other settlements that modestly increased litigation expense. Looking ahead, our focus remains on delivering operating leverage for shareholders. We expect to generate about 200 basis points of operating leverage in 2026. Those expectations include a constructive fee environment that complements our expected NII growth. We've seen encouraging momentum in asset management fees, investment banking, and sales and trading, and we look for that to continue. And importantly, if revenue comes in below our expectations, then obviously revenue-related expense will be lower. As for Q1, we typically see seasonal strength in sales and trading activity and elevated payroll tax expense. Combined with the absence of the FDIC benefit we saw in the fourth quarter, and combined with ongoing productivity improvements, we expect Q1 expenses to be about 4% higher than Q1 of 2025. And even with that, we still expect to deliver operating leverage. Let's now move to credit and turn to slide 11, where you can see asset quality remains sound with small improvements in several key indicators.
Wait for the conference to learn about questions about
charge-offs were $1.3 billion,
online payment rails, Ripple, this kind of thing.
And driven by lower losses in commercial real estate. Total net charge-off ratio this quarter was 44 basis points, down 3 basis points from the third quarter, and down 10 basis points from Q4 24. Provision expense in the quarter was $1.3 billion and mostly matched net charge-offs. Focusing on total net charge-offs, looking forward in the near term, we expect continued stability in total net charge-offs. Given the mostly benign consumer delinquency trends and low unemployment data, the continued stability of C&I, and reductions in our commercial real estate exposures. On slide 12, in addition to the consumer delinquency statistics, note the modest changes in other stats for both our consumer and commercial portfolios. Let's now turn to the performance across our lines of business, beginning with consumer banking on slide 13. Our consumer bank had a strong year, and for the full year, the team generated $44 billion in revenue and delivered $12 billion in net income. Net income grew 14% from 2024, and we earned a 28% return on allocated capital. In Q4, consumer banking delivered strong results, generating $11.2 billion in revenue, up 5% versus the fourth quarter of last year, and $3.3 billion in net income, up 17%. So a really strong finish to the year. These results reflect
people selling off. They're not hearing anything, so they're already giving up. That's okay. That gives me the opportunity to buy more.
Strategy and digital banking.
Keep selling it. I'll keep buying it.
Our focus on client experience and investments in both physical and digital capabilities, combined with more investment in product innovation and rewards, drove the strong results. Business was also managed well for shareholders as we grew expense less than 2%, allowing us to improve our efficiency ratio to 51% and deliver nearly 350 basis points of operating leverage. This 2% expense growth reflects our continued investments in our brand, highlighted by our minimum wage increase to $25 earlier this year and incentives for more production. Digitalization and early utilization of AI helped offset some of the investments. Consumer investment balances grew $81 billion from Q4 24 to nearly $600 billion, supported by $19 billion in full-year client flows and market appreciation. Average balance
Coca-Cola outperforming again today.
At $147,000.
This is good. Exactly as expected.
From last year.
We're beating the market again.
This investment platform serves as a great catch basin for first-time investors and for more experienced investors looking to manage some element of their own money. As mentioned, consumer net charge-offs improved again on a year-over-year basis, and we continue to see stability in asset quality metrics. Credit card net charge ratio of 3.4% improved nearly 40 basis points from Q4 and improved linked quarter. Finally, as shown in appendix, slide 21,
I'm providing commentary into my Discord Premium and my Electra members during this call to give you my buy orders, sell orders, and everything else.
Strong, reflecting
Here are the
impact
links
of our ongoing investments in digital. Turning to wealth management on slide 14, and you can see this is a business that is strong.
Coca-Cola rallying
right
now.
And
nice.
We've improved growth as we work towards the medium-term targets laid out at Investor Day. For the full year, revenue of $25 billion grew 9% compared to 2024, and net income grew 10% to nearly $4.7 billion. Over the past 3 quarters, net income's gone from $1 billion in Q2 to nearly $1.3 billion in Q3 and to $1.4 billion in Q4. Return on allocated capital went from 20% in Q2 up to 28% in Q4, and the pre-tax margin has climbed back into the high 20% range as we ended the year. Underneath all that, client balances grew $500 billion across the year to $4.8 trillion, and that included strong ending loan growth of nearly $30 billion or 13%. Within that, AUM flows were $82 billion and total flows of $96 billion. When coupled with the flows of consumer investments, we saw $115 billion of wealth flows for the firm this year. And for the year, Merrill and the Private Bank added 21,000 net new relationships, with the average size of new relationships continuing to grow across both businesses. Importantly, we're not just growing relationships, we're deepening them as we added 114,000 new bank accounts this year. And finally, I'd highlight the continued digital momentum as shown on slide 23, where new accounts have increasingly opened digitally, underscoring the effectiveness of our digital investments and the evolving preferences of our clients. On slide 15, you see the results for global banking. The team had a good year and generated $7.8 billion in earnings, and that represented about 25% of the company's overall net income. Year-over-year earnings were down a modest 2% as a result of interest rate cuts impacting NII from the variable rate assets in the business. The team grew average deposits $71 billion or 13% and grew loans $12 billion. This included the addition of roughly 500 new clients in middle market banking and more than 1,000 in business banking. It chose Bank of America as their financial services provider in 2025. For the fourth quarter, global banking delivered net income of $2.1 billion, down 3% year over year, with a 6% improvement in fees, overcoming the NII pressure. Business remains very efficient with a 50% efficiency ratio, and we earned 16% return on allocated capital in Q4. We generated $1.67 billion in investment banking fees, up modestly over Q4 24, and we maintained our number 3 position for the full year. And as Brian and I said earlier, investment banking fees showed good momentum given all the regulatory and tariff announcements around the globe and the certainty settling in, and our pipeline remains strong. Non-interest expense grew 6% compared to last year as we position the firm for the future with continued investments in technology and bankers. Switching to global markets on slide 16, I'll focus my comments on results that exclude DVA, as we typically do. Global markets team produced a record year of revenue, improved earnings, and solid returns. We generated $24 billion in revenue for the year, and that exceeded last year's revenue by 10%. Earnings of $6.1 billion for the year were up 8%, and the business generated a 13% return on allocated capital. It's worth noting this is the 12th consecutive quarter of year-over-year net income growth. Q4 global markets generated net income just shy of $1 billion, up 5% from Q4 24. Revenue, excluding DVA, grew 10% year-over-year, driven by strong sales and trading performance. Focusing on sales and trading, revenue ex DVA rose 10% year-over-year to $4.5 billion. And it was equities trading that led the improvement, growing 23%, supported by increased activity in Asia. And that brought higher revenue. It also brought higher cost in the form of transaction costs, as the clients still reimburse us for those fees. FICC revenue grew 1%, driven by improved performance in macro, rates, and FX products, offsetting a modest decline in credit products. Loan growth continues to benefit from opportunities tied to highly collateralized pools of high-quality assets, and clients value our expertise and liquidity in delivering these solutions. On slide 17, all other shows a loss of $132 million in Q4, with very little to cover here. And as we wrap up, I would just note the Q4 effective tax rate was 21%, and it was 19% for the full year. For 2026,
now comes the Q&A when they ask questions about digital payments, online,
and then finally,
crypto, Ripple, these kind of things.
We provided a summary of the forward-looking guidance that we discussed today. So I'll stop there. Thank you. And with that, we'll jump into Q&A.
Here we go.
Thank you. If you'd like to ask a question, press star 1 on your keypad. To leave the queue at any time, press star 2.
I've got buy orders to buy more XRP and more Coca-Cola. The S&P is cracking. The crash is coming. And I'm beating the market again today. Very happy with this.
Thank you. Our first question comes from Betsy Graseck with Morgan Stanley. Please go ahead. Your line is open.
Hi, good morning.
Morning.
Thanks so much for all the detail here. I did just want to understand one thing on the outlook as we're thinking about the expense ratio. I know that you've got the accounting change, and you also have outstanding guidance for the expense ratio over the medium term. I believe it is 55 to 59%.
Right.
Is that right? Okay.
Yep.
I'm wondering, are you going to be adjusting that expense ratio guide given the accounting changes that you have made in this quarter?
Well, I don't think so at this stage, Betsy, but similar to our comments at Investor Day, the numbers that we put out aren't a cap on our ambition. So obviously, as we go through the course of the next couple of years, if we improved our efficiency ratio by a couple hundred basis points this year, we're going to keep driving towards that range. Once we get in that range, we'll reassess and we'll consider
banking efficiency is what
consider a lower efficiency number in the future.
It's all about.
Yeah, I was just thinking mechanically with the accounting change, the revenues improve, right? So with the denominator moving higher, shouldn't that,
just a word is all we need.
Expense ratio of 55 to 59 move down a percentage point on each side?
Well, remember, we recast the prior periods, so that's already in there when you use the comparative periods. And I think part of the reason that it was important for us just to recast all the numbers and adopt the accounting is because that's how our competitors showed their results. So now we feel like it's on a comparable footing.
Okay. Thanks so much.
Thank you. We'll now move on to Ken Usdin of Autonomous Research. Your line is now open.
Hi, thank you. Good morning. So just a follow-up, Alistair, you made the point about just, your outlook for fees is strong, and obviously there'll be compensation aligned with that. So just coming back on expenses in an absolute sense with 4% year-over-year growth expected in the first quarter, and I know everyone's just thinking about just how do you get to this, operating leverage algorithm. Is that around what you're expecting, just absolute expenses to grow given your underlying base of good fee growth in there?
Well, I think what we're trying to convey is, and we've said this over the course of the past several years, ours is an organic growth company. We're investing for growth all the time. And when we perform the way that we believe we can, we're going to create operating leverage every year. That's what our North Star is in terms of the financial model. So we've guided you towards NII up 5 to 7%.
Please tap the like button and share this out.
We've said, in the first quarter,
it helps the channel grow and shares it to more people.
We've said that we expect the operating leverage to be a couple hundred basis points. So that should allow you to work backwards into the expense side of the equation, especially since we've given you one essentially. And then I think it will just depend on your revenue assumptions regarding assets under management fees, markets, and investment banking, because those will be the big drivers. And yes, we remain constructive on all three of those.
Okay, got it. And then so as you think about when you talked about the investor day, you talked about a 200 or 300 basis point range. So, obviously each year is going to be different things, but you've got with a strong base of NII growth and fee growth, and we're on the 200 side. What are the things you could do to kind of, longer term expand that and potentially get back, to get up to the 300 side of that 200, 300 range that you had given us in November? Thanks.
Well, I think one of the things we've talked about when we went back to Investor Day, and this gets back to driving return on tangible common equity over time. You think about the fact that we've just gone from 13 to 14% last quarter. Prior quarter, we were at 15. We said we're going to get in that 16 to 18%. If you think about the organic growth opportunity we have around deposits and loans, and then you add the fixed rate asset repricing that drops to the bottom line, and then you combine it with the fee growth that we've talked about, when we manage expense carefully, as we have done this year, and headcount flat, sort of the core expense minus BC&E and FA incentive comp closer to 2% type growth, then you'd look at something that gets pretty interesting over time. So that's what we're trying to drive over a period of time. And you're right, it won't always show up every year where it's exactly the same. But what we're trying to do, most importantly, drive organic growth, keep our expense discipline. That's it.
Ken, the number one thing is to continue to let the headcount, work the headcount through operational excellence and applications of new technologies, including AI that we gave you a sense for. So as we told you at Investor Day,
you literally saw XRP investors sell off, coming to the end of the call, thinking nothing's happening, and now we've entered the Q&A stage where they think there might be something. Again, now it pops up again. You can see the patterns very clearly now.
Digital capabilities, now AI capabilities.
All it requires is one word.
The headcount was basically flat. Well, we added more,
and we're straight to $5
in the field, facing off to clients and generating new client flows, and that's why when Alistair talked about the middle market business, particularly the private bank business, why we're seeing strong growth there. So it's going to be about bringing the numbers of people down over time, and we expect the headcount to come down during this year. And each month to maintain neutral headcount, we have to hire.
I've just placed my
turnover rate. You got to think it's higher, 1,000 plus people. So we can just make decisions.
Expectations and suggested limit orders in Discord, Premium, and
we absorbed, as Alistair said,
YouTube Electrum members. You've just been emailed it.
Colleges in July.
It's only a couple of bucks to be a member.
By the end of the year, we were down to 2,000 people and ended up back net neutral. So that's the way you're going to get there. If you look at the expense load, it comes from people, and it comes from the benefits and the compensation, and it ultimately comes from the buildings and computer systems to allow them to do the great job for clients. So that's what we're working
on. Okay, guys. Thanks a lot.
Thank you. We'll now move on to Mike Mayo with Wells Fargo Securities. Your line is now open.
Hi. If you could just give more of an update on technology, what do you expect your spend to be this year versus last year, your spend on AI, and then slide 21. But again, I think everybody appreciates the data you provide on your digital engagement, which is more than others. But no good deed goes unpunished. I'm just looking at slide 21, and your interactions in consumer with Erica took a dip down in the last year, even while your users go up. So if you can talk about spend, investments, and results from tech, and especially AI. Thank you.
Yes. So, Mike, we'll be up on initiatives this year, 5, 6, 7%, I think, types of numbers. Total spending $13 billion plus, $4 billion plus in initiatives. That's all new code. And in that spending, remember also we get the advantage of all the other people. So, for example, under the 365 Copilot rollout, which is now out across a total of 200,000 teammates and using it and learning from it, we expect to get good leverage of that. So that's an increase in the run rate year over year. So that's the technology is increasing. The technology number is sizable, and the team does a good job in implementing change every weekend, frankly, except for one a year. So we feel good about that. One of the things that you'll note is you use these technologies in combination. So your point on Erica, I asked the same question, Mike, because it's pretty straightforward. Why would the interactions with Erica go down? The reality of that is what we don't show you is the amount of alerts that we deliver. So you can set up alerts, which then has slowed down the need for Erica because the alerts are up to, I think, billions a quarter that are telling you when
Erica is rubbish
like
and it's bloody annoying.
And asking the question. So
you can't turn the bloody thing off.
Is growing very quickly. So
you have to have it every single time you open the app.
From a customer to you,
and
figure out how you can get that customer the best customer experience at the lowest cost, so you can plow that back into the low fee structures, which help us grow the business for, as we said, for 7 straight years in checking accounts. So, so there's a technical explanation on the Erica that is a little bit different, but thematically, you can see just the digital enablement just continues to grow and continues to help us leverage a franchise, and frankly, consumers now pushing through 50% profit margin, and it'll continue to go up.
Okay, and specifically on AI investments, like how much do you spend on that, or the number of people, or if you could dimension that, and kind of what kind of outcomes you're looking for, especially as we sit here at the start of the year?
Yeah, well, we're looking for. We have to give you an example, we have 18,000 people on the company's payroll who code, and using the AI techniques, we've taken 30% out of the coding technique, the coding part of the stream of introducing a new product or service or change. That saves us about 2,000 people. So, that's how we're applying it. That was this year's statistic, meaning 25.
Mike, I'll answer your question at the end. I've just bookmarked it. I'll answer that.
There's 20 different projects going on in the company. I don't know off the top of my head the
Please
total
stand by, Mike.
expenditure, but it's several $100 million. And importantly, we're going through the company to generate more ideas how to apply AI. And I use an example, like our audit team has built a capability. They think a series of prompts around doing audits and stuff to allow them to shape the headcount back down that they had to grow during the regulatory onslaught over the last few years. They're going to be able to bring that down, and with AI, they'll be able to bring it down further. And they've laid out plans to do that. And so that's going on everywhere. But that was organic from there, starting to use the Copilot capabilities, and then learning how to do the prompts, and then using it to set up audit practices. So you're seeing it everywhere in the company. So there's, 15, 20 projects going on, and there'll be a laundry list of much bigger size next as we go through the company now, are generating ideas now that people are using and getting used to how to use it.
All right, thank you.
Thank you. We'll now move on to John McDonald with Truist Securities. Your line is now open.
Thank you. Good morning. One of the other levers for the ROTCE ambitions that you guys have talked about is the denominator with the CET1 ratio. Could you talk a little bit, Alistair or Brian, about the timeline for kind of where you are today with 11.4 to the target you laid out, which I think was around mid-10s?
Yeah, I think, John, if you think about that, we're still, as you well know and your colleagues well know, we're still waiting for the rules to get finalized, and they're multifaceted rule set that we got to make sure.
I'll answer all questions at the end.
Goal,
please stand by. Plus, we have a
1160,
tariff live special from Sensei.
And you're going to keep peeling that number down through expansion of our markets business, expansion of lending and other uses of RWA. And we bought back a little more stock than in dividends than we earned, and so we'll keep working that down. But the idea is not to take the 200 billion-ish nominal and reduce that a lot. The idea is to use the excess to grow the balance sheet and let that work down. As we see the final rules, the constraint may be sort of tangible common equity ratio stuff where 620 could be in the high, mid to high fives or something like that. That might be possible. And if so we'll let this all drift down over time. And so just expect us to keep buying back, paying the dividend, increasing it, and buying back the stock. And remember that, as you said, we've drifted down a little bit by growth, but also the accounting change hit it, which won't repeat. So the next quarter, we'll keep walking it down.
I'm beating the market again today. The S&P is showing cracks. That's why I sold it all a few weeks ago and moved to Coca-Cola, and that was the right thing to do.
And then maybe if we pull back just the broader timeline on the ROTCE path, it looks like for 2025,
a crash is coming, 100%. I'm
low 14.
very confident of that.
What's the ambition, to get to the lower end of the 16 and then the 18 over time?
I think we made it clear that you had by the 8th quarter to the 12th quarter, you move in the lower part of the range, and then the upper part of the range, given a core economy growing at 2.5% type of numbers. So, and all the other attributes. So we made that clear. So that's basically 8 quarters from, including this quarter, obviously, the first quarter 26, and then we move into the 16 level, and then we move to the upper end of the range as we move through the third year.
Okay, thank you.
Stand by for a tariff special live with Sensei.
We'll now move on to Matt O'Connor
and a live Q&A
the line is now
for
open.
all members. Please stand by.
Good morning. I was hoping you could elaborate a bit on your outlook for loan growth and some of the drivers. You've obviously been growing loans quite a bit and, well in excess of the industry, and how sustainable is that, and what are some of the drivers?
Yep. So embedded in our NII assumption is a loan growth in the mid-single digits, Matt. Obviously, we've had pretty good loan growth this year, kind of 20 billion a quarter or so. A decent amount of that has been on the commercial side, and we highlighted that in our financials and in our commentary earlier. So, we're still seeing now growth in each of the consumer categories, and that feels like it's in a position where it's likely to continue to grow from here. So we feel pretty good about those two. Don't see any reason that it would be a whole lot lower necessarily than it was last year, but last year was a good loan year, no question. So that's why we're saying mid-single digits. I think it'll still be led by commercial, but you'll see the consumer categories picking up.
Okay, and then I guess specifically in credit card, the spending was good, up 6% year over year, but the balances were up just a couple percent. Fees were down. I know at Investor Day you talked about accelerating the growth there. Maybe just update us on kind of the initiatives there and the timing. Thank you.
Yeah, so Holly's very clear about this at Investor Day. It's our intention to continue to accelerate the growth in card. I think we've seen that in the last 3 or 4 quarters. It's picked up sequentially, quarter after quarter. And if you were to look at what the team is doing right now, they're investing a little more for future growth. So you can see that in some of the things we're doing around the World Cup this year. You can see it in some of the things we're doing around more rewards in November. You can see it in our rewards program with our co-brand partners. And you could see it in the June cashback rewards offering. So we got a lot of things going on right now that we're excited about. We know what we've committed in terms of higher credit card growth, and we feel like we're on the right path.
I will answer all questions in a moment. Some very important questions being sent in.
Thank you. We'll now move on to Erica Najarian with UBS. Your line is now open.
Hi, good morning. I just need to re-ask this question, Brian, Alistair, because, as I speak with investors, I think the communication on efficiency and expenses is a big part of what's holding down the stock. So just to clarify, in terms of what Betsy was asking, she was asking, well, given the restatement and thereby higher fees, shouldn't you adjust the efficiency ratio range to 54 to 58%? Because you shouldn't get credit for the restatement, right? So that's why she was asking that. And I think what Ken was asking was, everything that Alistair mentioned, the curve, the growth,
banking
markets,
efficiency, keywords
it's
here.
hitting this year, right? And so you're on the low side of the 200 basis point of the 200
Correct.
to 300. And so I guess the question here is, what should we take away in terms of the expense messaging? Is it sort of what Brian alluded to, that the headcount just needs time to work through?
This is quite a salty question in the banking sector right now.
Patient? Is there more investment spend, like you told Mike Mayo that you wanted to front load in a great revenue year? Like what exactly do you want your investors to take away in terms of how you're viewing the expense growth relative to the revenue side? Because, for example, for your closest peer, JP Morgan, they grow expenses to $105 billion. No one really blinks, right, because of the revenue side. So what is the underlying message for operating leverage for Bank of America over this year and over the 3 years that is underpinning that 16 to 18%?
Let's back up to it. As Alistair said, we are driving these numbers, and they have improved on a recast basis by a couple hundred basis points, and they'll continue to improve. And so the range will move down to lower numbers, and when we get into the range, we'll reset the range. But I think we're focused on the wrong thing. The question is, what are you doing now, as opposed to what you're saying you're going to do? We have a tendency to actually deliver, as opposed to talk about what we do in the future, and that's what we focus on. So what have we done? The efficiency ratio came down a couple hundred basis points on an apples-to-apples
Salty answer too.
With the parts of the revenue stream that are least efficient, wealth management revenue growing very strong, and the capital markets revenue. So when the consumer bank revenue grows and the global banking revenue grows at the efficiency ratio they're at, they produce a lot more pop than wealth management, which has obviously the financial advisory tariffs. So we have to also think of where the revenue growth is coming from to see the improvement. But we moved it 200 basis points. We've moved it in past years when rates stabilize. We'll move it into the 50s. As you get the lower efficiency ratio, the operating leverage can be narrow, and you still get the bigger earnings pot. One thing that we've been telling you, and that we want to make sure people understand, is our goal is to keep driving all the extra NII to the bottom line, meaning the difference between sort of the core and the repricing, because we owe that to drive the returns up, and the rest of it will have more normalized attributes to it. So we've driven the efficiency down. We expect to continue to drive it down. It is all going to be due to headcount, because that's 60+% of our expenses. We've absorbed inflation and everything while we're doing that. The expense growth, Alistair just told you, first quarter 4% with expense increases and base increases and third-party inflation coming through, et cetera. So we're very efficient in each of our businesses, and we're very efficient relatively to our peers, and that will continue to improve. And that's I don't know how to do it. One of the things when I talk to investors, that I actually talk to people on a lot of stock every quarter, their view is stay away from focus people on the operating leverage in the company, because in the end of the day, we've got to grow expenses at a faster rate, which we have been doing, than a slower rate than revenue. Excuse me, grow revenue at a faster rate than expenses for operating leverage. We produced that 4 out of the last 5 quarters. We had 5 years of it leading up to the pandemic. You should expect us to get back on a streak. But the reason why they want us to focus on that, the people that own the stock, is to get away from the nominal dollar debate every quarter and get more focused on how the team's doing a great job of driving the revenue and driving the expense. If the revenue growth slows down because the dynamics outside our company, the expense growth will slow down.
Got it. Okay. Thank you.
Thank you. We'll now move on to Jim Mitchell with Seaport Global Securities. Your line is open.
Hey, good morning. Maybe just a question on deposits. We've seen 3 rate cuts in September. Can you speak to what you're seeing in terms of deposit pricing, whether betas are worse, better, or worse than expected, and just also what you're seeing with respect to client behavior would just be helpful.
Okay. First, with respect to our pricing discipline, really when you talk about pricing, we're most focused on the upper end of the corporate banking, commercial banking, very large global banking deposit base, where we're passing on rate cuts essentially the moment that they take place, and in full. And so that's why you see the beta there obviously quite high. Same thing in the upper end of wealth management. Consumer, you see much less in the way of pricing coming down because we have so much in the way of non-interest bearing and checking and so much in the way of low interest bearing. So we feel good about the team's pricing discipline overall. In terms, and you should expect that to continue in Q1, recognizing that the rate cut was late in Q4. In terms of growth, I think if you were to look at page 7 in the earnings materials, it sort of tells you the picture. In the bottom right, you can see global banking. That's had a very good period of growth. Not sure that sustains at that sort of level, but we've had good growth in global banking. And most importantly, in the top right, consumer has begun to turn and is growing. And that's the most powerful engine for us. Those are the most valuable balances. We've now got 3 quarters of year-over-year growth. It's poised to grow, poised to accelerate. So that's very important. And wealth management is bottoming here. So, we feel good about the mix of deposits changing in our favor this year. And we'll just need to make sure that we keep track of that through the course of the year, but we're pretty optimistic on that, Jim.
Right. So I guess when you think about maybe inflection in consumer deposits growing, loan growth still strong, you'd have a NII target of 5 to 7% for this year. Can we just drill down and look at NII X markets? It's grown about 5% over the past 2 quarters. Is that a reasonable growth rate for this year? Or do rate cuts make that a little more challenging? Just how do we think about the markets versus X markets NII dynamic?
I was right.
Yeah. So
the S&P is cracking. Coca-Cola was a right trade. We're winning again. We're beating the market again. Fantastic. We are winning again today. Lucas Aids are all winning on those trades. We're about to hit $300,000 live on the show.
They're totally about NII.
There it is.
That obviously is helpful. Third, when rates are cut
from 5,000 to 298 live on the show, we are not losing. 127 trades,
all those things,
122 wins. How about that, folks?
Making sure that I pointed out.
How about that?
Comments earlier was
we're winning again.
We ended up at $15.9 billion. That is what I would consider
holy flipping moly.
Mostly all core NII. It just happens that we had about $100 million or so of global markets NII that I think will revert back to MMSA next period. So that's the one part that I just feel like is important for us to note. But otherwise, I think global markets NII will grow with the continued investment in loans and in the business over time.
Okay, thanks.
Thank you. We'll now move on to Chris McGratty with KBW. Your line is now open.
Oh, great. Good morning.
I know I'm muted, folks. I'm having a conversation quickly with Sensei. Please stand by.
What's left to go, in your view, based on your core deposit trends, and how much of that is baked into the guide, the liability optimization?
You're talking how much of the wholesale funding can we take down over time?
Yeah, that's right.
I'd say probably at this point somewhere around $50 to $100 billion. Just I'm ballparking that between repo, CP, some of the short-term wholesale funding, institutional CDs that we put out there that are just quietly rolling off now, quarter after quarter after quarter. So that's the sort of number I would use.
Okay, great. And then just piggybacking on the loan growth comment, the optimism I heard on the commercial growth. I guess any asset classes perhaps not as optimistic into 26. And if I missed it on the card expectations with the proposal, any comments there about either growth or expectations for to offset that would be great. Thanks.
Just restate the question one more time for me. Just say it again.
Oh, sure. Expectations for loan growth, anything you're not pushing on for growth. And then given the president's proposed 10% cap on card yields, any comments related to that, related to your card strategy? Thank you.
Yeah, okay. So on loans, I'd say we're pushing for loan growth everywhere we can find good, high quality loan growth. So there is no place that we're not pushing. We obviously have substantial excess of deposits above our loans, so we've got a lot of capacity there. We've got a lot of excess capital we'd like to continue to deploy if we can find productive uses with our client base. So pushing everywhere. I think commercials obviously had a good period. Wealth management has had a good period too. Some of that relates to things like traditional securities-based lending, but some relates to wealthy people looking to purchase expensive assets, and we're there to help them with that, obviously. The consumer piece had been quieter last year, maybe picked up a little more this year. We can see the growth now in a variety of categories. Interesting to see home equity beginning to grow in variety and across time. Mortgage, a little more activity this past quarter. If you see our originations, see we had more there in resi mortgage. So we're looking to continue to see pick up in consumer activity broadly. And again, we're trying to drive more card balances. So that's really important for us. That remains at the front of our strategy right now.
Chris, on the rate cap, obviously, you're here. There's a good public debate going out there on if you have unintended consequences of capping rates, as has been proposed over many years by various components in Congress and stuff like that.
Okay, we got a special event set up for you again.
People understood.
There will be a live Q&A in a few moments, but as you can see, we are absolutely crushing the market again. All our trades are winning again, beating the market
available to them on this credit
by a long way.
Be restricted, and so you have to balance that against what you're trying to achieve from the
Look at that.
We're all in for affordability. You all know how we run our consumer business. It's the most fair to the consumer, and that's why we get good growth and high customer scores, and those keep increasing. So we built a product to stop people from going to payday lenders. It's called Balance Assist. We've had 2 million plus consumers have used that product to borrow a short-term loan for $500 for up to $500 for a $5 fee. We have a no-frills credit card with lower rate structure.
The S&P is rolling over. This crash is coming. Coca-Cola is the right place to be with XRP, 100%.
If with instruments that cap, you will
I will answer all questions in a moment. Stand by.
And I think
and a special event on tariffs from Trump.
People are making our points to the various the administration and Congress and others involved.
Okay. Thank you very much.
Thank you. We'll now move on to Glenn Schorr with Evercore. Your line is now open.
Hi there. I think you brought up an interesting point, getting people to focus on away from the nominal expense dollars. And you obviously mentioned the less efficient revenues are growing good from wealth and capital markets revenues. So my question is, in a good backdrop like we're in, good economy, strong economy, everybody's got a job, markets are doing well. If you take a step back and you see flattish consumer deposits and down GWIM deposits, it's not what maybe you would have expected. And that's not a you thing, that's an everybody thing. So I'm wondering if you could address that, even with 680,000 new checking accounts. Like, why do you think we see this sluggishness in deposits? And do you think we'll see a turn at some point in 26? Because that would help the operating leverage story as well.
Yeah, so I think you have to think about what the consumer, especially even the wealthy consumer, they come to us for the transactional accounts, and they come to us with their savings money. And as market alternatives, off-balance sheet alternatives, money market funds, et cetera, ran up in rates, you saw a fair amount of money move, and that especially in the wealth management business. What Alistair explained earlier is that's kind of all behind us. In other words, the consumer's been stable and bumping along. The wealth management actually grew in the last part of the year, and so you're seeing it. And these have settled into much higher levels than they were traditionally. So I think wealth management was maybe
major defensive play,
200 billion before the pandemic, maybe 230, something like that, 240 maybe, and it's moved to 280.
Another one.
So you're seeing a lot more cash stored. So
crash is coming.
It's people putting money into the off-balance sheet yielding things because, frankly, we don't need the cash, as Alex explained on some of the things, and then earlier on the rates paid in CDs and things like that. And then secondly, it's actually going, the risk on trade that went in the market. And on the general consumer side, what's happened is that, they fine-tuned some of the higher pieces. In a lot of the decline in balances that we've experienced up until about a year ago, most of that decline was driven by wealthy consumers in our consumer franchise. In other words, the balances for the people who had less than $10,000 average.
Please stay on the line, Mike. I got to answer your question. It's really important to me.
They were pre-pandemic.
At the end of this,
and then have been stable for the last few years. But the people who had 50,000, 100,000, 500,000, and average collective balances pre-pandemic were down 20%. And with the percentage of total deposits there, that drove it down on a relative basis. But again, that is stabilized. So we feel good where it's going. It's a lot of leverage. You have a consumer business which has a 50% profit margin, round numbers, and so it contributes to that. And if you go back and look historically, we have gotten that number down pretty far, and that as the biggest profit engine in the company is core to us, driving that expense efficiency across the whole place.
Okay, appreciate that, Brian. Maybe just a little more color on your comment on the IB pipeline looks good. There's moving parts in the fourth quarter, so I don't want to overemphasize the revenue environment. But maybe you could talk about the outlook. It's expected to be a pretty strong year. The underlying conditions are pretty strong for cap markets activity. So my question is, do you feel like you've made enough investments to capture more than your fair share, pick up share, and do you expect as good as a year as I do? Thanks.
Well, I mean, I think we feel good about both of those. We feel good about the deal environment. Brian noted earlier, second half of the year, investment banking fees were 25% higher than the first half of the year. And that's largely based on more and more certainty around tax and trade and some of the things that really matter to CEOs and CFOs and boards of directors. So we feel good about the investment banking environment. We feel good about our pipeline. And yes, on the second question, we feel good about our investments. So you know this, Glenn, but for the benefit of everyone, we've expanded our local banking presence around the United States to improve our client coverage. Today, we're in 24 different cities. We've got over 200 bankers in a group that really focus on middle market clients. We've seen the benefit of that. We expect to see that continue as their relationships continue.
S&P now down over
We're
7 days.
It's
starting to crack.
Emerging companies in things like technology and healthcare in a different way earlier in their life cycle. And we're covering more clients internationally. So all of those places we feel like are the sorts of places that we should perform well. So yes, we feel good about that. And then I just say, when you look at performance overall, yep, we're at the top with some of the very largest transactions, so we feel like the franchise is in good shape.
Thanks, Alistair.
Thank you. We'll now move on to Steven Chubbuck with Wolfe Research. Your line is now open.
Hi, good morning, and thanks for taking my questions.
Thanks.
So wanted to hey, Alistair. So I wanted to ask on the GLIM targets that you had outlined at Investor Day. You saw some good momentum exiting the year.
Lucas Aids are winning.
You outlined the 30% margin target with accelerating growth expectations on the organic side, but new recruitment does require some upfront investment. So just wanted to understand what gives you confidence you can deliver both the acceleration in organic while still driving better operating leverage.
Yep. So I think if you were to ask Lindsay and Eric, they'd tell you, and if you ask Katie, they'd tell you that they enjoy significant competitive advantage as it relates to covering our clients. So Obviously, we're in the wealth business, but we're also in the banking business.
Yeah.
We have high tech and we have high touch.
Stand by for live Q&A.
We are digital, but we're also local.
And Trump tariffs live.
And then in terms of prospecting for wealthy families to add net new, we've got consumer, business banking, commercial banking, corporate investment banking, all helping that group, working together. So that franchise is one then that can deliver. And if you were to look at for example, competitive attrition this quarter, the lowest we've seen in years. I think the Merrill FA see the value of our franchise and how they can help their own clients over a long period of time. And we're picking up the recruiting of experienced advisors. That isn't an enormous part of our strategy, but it's an training program so that we're training people in wealth management at Bank of America and Merrill. And that's ultimately what we believe we can just keep driving in order to improve the net new flows.
That's great. And then just one ticky-tack question on the tax rate. First off, thank you for implementing the accounting change. Certainly makes our lives much easier from a modeling standpoint.
No mentions of
at least in the 8K,
digital payments yet. There's about two questions left to go.
Where you didn't adjust
then we've got tariffs with Sensei live Q&A. All our buy orders and sell orders for crypto. I'll give you all that.
Beyond 2026, or if there's any potential.
But there was a very salty question about efficiency.
A little bit of upward.
That's important.
As earnings continue to rise.
That's the whole future profit.
For now, I'd use the 20. But I mean, obviously, hence the guidance earlier. You're right. There are a small number of deals that don't qualify for the treatment. Now, over time, all of those are going to burn down and burn off. And then in addition, you've got the question of whether or not some of the tax credit equity deals will end up expiring after 2027. So I think over a very long period of time, it's possible that the effective tax rate drifts up. But we'll be able to give you more guidance on that as we go through the various years.
That's great. Thanks so much for taking my questions.
Thank you. We'll now move on to Gerard Cassidy with RBC. Your line is now open.
Hi, Brian. Hi, Alistair.
Hi there.
Can you guys share with us, as you know, the Genius Act was passed, and there's a lot of talk about stablecoin deposits. And I think they're now trying to figure out how to close a loophole so that the stablecoin deposits cannot pay interest. If they're not, meaning Congress, if they're not successful in closing that loophole, what's kind of the impact that you guys are thinking that could happen from this trend in stablecoin deposits?
So I think I would not look. We'll be fine. You know, we'll have the product. We'll meet the customer demand, whatever may surface, and so I don't worry about it. But the point we've tried to make, and if you look at some studies, I think were done by Treasury, is that they say you can see upwards of $6 trillion in deposits flow, you know, off the liabilities of a banking system to the as the deposits into the stablecoin environment. And the key of that is to think that the restrictions to be a stablecoin is basically think of it as a money market mutual fund concept. It has to be invested in only deposits, banking, Fed, or treasuries and short term. And so when you think about that, that takes lending capacity out of the system. And that is the bigger concern that we've all expressed to Congress as they think about this, is that if you move it outside the system, you'll reduce lending capacity of banks. That it particularly hurts small, medium-sized businesses because they're largely lent to end consumers by the banking industry, where capital markets-oriented companies go off into the market. So I think, you know, in the end of the day, at the margin, you know, the industry, you know, gets loaned up, and if you take out deposits, they're either not going to be able to loan, or they're going to have to get wholesale funding, and that wholesale funding will come at a cost that will increase the cost of borrowing. And so that's the issue that people have to struggle about. Do I think it affects the course of history of Bank of America? No, we'll be competitive and drive it. But I think in the industry overall, I think it's something that we've expressed concern as an industry, and we continue to make sure that they see those issues as our trade groups and others as they work through the final legislation. What will come out of it, I don't know, in terms of adjustments or thoughts about that, and they're working on it as we speak.
Very good. Thank you, Brian. And just as a follow-up question, obviously you guys have presented a positive outlook for yourselves for 2026. The industry appears to be setting up very well. With
still think my Bank of America connections aren't real?
Healthy economic
There we
growth.
go. I put my name in the sand and told you it was coming, and there it is.
And
also, you don't believe that algos and people are watching. The second he said that, boom. You see what I mean? So much data, evidence to support all of this.
Risk, of course, which is always a risk. What do you guys focus on just to keep an eye on in case something goes off the rails or something?
Yeah,
tap the like button. Light up the screen with some super chats to support the channel.
Agreed.
At the end of the day, think about a structure. We are always doing stress tests that reflect, a 50% decline in.
You're welcome, by the way.
And market declines and all that kind of stuff, and we test ourselves every quarter. We have trading.
Well, I do take the abuse
and so you're always trying to
for it. So I'm going to
configuration of activities that produce
wallow in the glory.
Going to reverberate into the global financial system and to the U.S. financial system and into the U.S. banking system is going to be the economy, right? The recessionary environment,
Why do you think I
high
bought?
Unemployment, those types of things. So what we do is we stress scenarios that produce those characteristics, but really, if you think about it, the stress test is going from where we are today up to 10% plus unemployment.
Some people are saying, what boom?
The methodology
it's not about the boom, it's about the change of direction, like the yen carry trade. It's the reversal of policy. You saw what happened with one word. If he said Ripple, XRP, boom, $5. And they will.
They don't swing back.
Look, people took profits. Look at that.
But the
up, down.
Is a good thing, and we all support that. So
it's coming.
That's the way to measure it.
I wouldn't put my money in it if I didn't think it was. I don't lose money.
I could rattle off, yes. But you sat there and said last year at this time, those same dimensions were in place 2 years ago, 3 years ago, 4 years ago. But we just don't see what we see differently than this maybe 3 or 4 years ago is the momentum in the market, the capital markets activity, in the investment in AI, in the consumer spending is 150 basis points higher than it was back then in our customer base. The credit quality is we're running at 40 basis points levels. That's a level that is among the lowest in the history that we could find in a company going back 30, 50 years. These are good setups.
I will answer all questions in a minute. Not the trolls talking rubbish. These are my trades. These are my wins. $5,000 to nearly $300,000. I don't win now and again or sometimes. We win all the time.
We make sure that we take the credit risk.
If you want to troll, go somewhere else.
Leading the financial crisis,
we do not need you here.
Things like that. So, the industry is in pretty good shape. Yet there'll be something that will happen, and we'll all have to adjust to it. Let's just hope it takes us longer the next year to happen.
Yeah, no, totally agree with you. Good answer. Thank you, Brian.
Thank you. We'll now move on to Saul Martinez with HSBC. Your line is now open. Please go ahead.
Thanks for taking my question. And I wanted to follow up on
more coming
credit. And apologize if you addressed this in the prepared remarks, but it's been a busy morning. But your loan loss provisions and charge-offs have been, particularly low in the last couple of quarters. Brian, you just mentioned, the 40 basis points being historically low. Wholesale also, very low. I'm just curious your thoughts on whether you think we're at below trend levels of losses and in what categories. And is there a way to think about what more normalized
just here to help people? Of course, the trolls just don't like to see people winning consistently
as we have now.
That's their weakness, not ours.
Well, you're right. Asset quality's performed quite well. You can see that in consumer. You can see that in commercial. At Investor Day, we gave an idea of what we thought through the cycle might be. I think we said at the time 50 to 55 basis points. So you can see right now, the last 2 quarters, we were at 47 and 44 overall. So we're obviously happy to see that.
Thanks for the support.
We feel like we underwrite the right risk.
It's
we feel like
very
we
much appreciated.
We feel like we've
Thank you.
that, and it happens to
Takes
be a good
so much
environment
abuse
right
from the idiots, but I love you
maybe
all.
the
Thank
50
you.
to 55 is the right number for through the cycle. No change to Investor Day.
That's helpful. And I guess consumer deposits, you expressed some optimism that you're seeing an inflection there and some acceleration. Just curious where you think the growth can get to. Do you think we can get to mid-single digit types of growth in consumer deposits? And what are some of the variables that would drive that? Does it depend on additional rate cuts? And just kind of curious where you think a more normalized level of, or not a more normalized level of growth, but where do you think it could go to as rates come down and deposit growth starts to materialize?
Well, look, Brian did a nice job of sort of setting the historical context. We've had a enormous pandemic bump, followed by normalization back towards something that would be more just normal for consumers in terms of what they would have in their checking accounts. That has taken years. But what we're seeing right now, Saul, is if you look at the checking account balances, for example, they're up a couple % now year over year. Not zero. So, do I think it can go higher again next year? I believe we do. Historically, we might see, consumer deposit growth at GDP to GDP plus type levels. Now that would put you, in the sort of 4 to 5% type of range. Maybe we don't get all the way there this year, but we just came off a year where we added 3%. So we're obviously expecting and hoping for something slightly higher again in 2026 as we move to something more normal.
Got it. That's helpful. Thanks.
Thank you. At this time, there are no further questions in queue. I will now turn the meeting back to Brian Moynihan.
Stand by.
Thank all of you for joining us. And just in summary, it was a good
live
quarter,
Q&A.
a good year,
Much
and
to
I
give
want to
you.
thank our team at Bank of America for producing it. We've laid out at Investor Day the world-class franchise we have across all these businesses. You can see their performance continues to make good progress in 25, both on revenue, profitability, and returns. The organic growth that I outlined earlier remains strong. The credit is very stable and very good quality. And we continue to manage headcount and expense, as we talked about, to drive operating leverage. So thank you. We look forward to talking to you next quarter.
So there we go. Right. We're going to do a Q&A very quickly, support everybody and do the best I can to give you the best information. So first of all, I would like to ask if everyone could tap the like button. This is a really big day. There's a lot to unpack. There's tariffs coming up in a few moments with Sensei Live. Can everyone? I've only got time to ask to do each thing very quickly. So I'm only going to say each thing once. Would everybody please tap the like button? It would really, really help. Thank you. Has everyone subscribed? I'm only going to ask once. It will really help share this news out today that I'm about to deliver to you now. Have you all done that? Click subscribe. There's XRP and 109,149 subscribers. Thank you very much. I won't mention that again on this stream now. So what we heard there, what we proved again, there is a real connection with algorithms, social media, front-running investors, observing certain channels, certain networks. I've seen it. I've spoken to people that are building the exchange down in Dallas. I know it works on a fiber optic connection directly linked to AI servers where they're front-running trades. They are seeing what people are buying, what they're selling, what they're talking about on social media. This is a huge thing. And I want to be absolutely clear. I am not in any way whatsoever saying that I can move the market or this channel can move the market. That is not what I am saying. It's a much, much, much more complex system than that. It's the same as if you look at a drop of water, it looks like a pure drop of water. But in fact, if you look under a microscope, you see all the organisms, microorganisms moving and so on. It's the same as you stand back and look at a planet. It just looks like a big marble in the sky. But when you go in, there are all of us running around. So it's not just me, it's thousands of people like me, millions of people, hundreds of millions of people measuring certain things, combine it all and you get a trend. And these algorithms are working against us. I have a direct link to a press room White House contact. I have a direct link up with Bank of America, direct links with Ripple, Robinhood, Coca-Cola now of a few days. This is real stuff. This really, really happens. I talk to people. I interview CEOs live on the show, and I haven't missed 127 trades, 122 wins. I've only lost 5 times, showing you what not to do. Okay? So today, we saw it again, just a mention of stablecoins, and up it goes again. As soon as they say Ripple XRP, we're going to $5. We're not predicting some stupid number because some stupid idiot is trying to sell you trading programs. No, we're not doing that. Our trading program is for free, included in our newsletter. My memberships are all the cheapest they could possibly be. Literally, the minimum you can charge on YouTube. I'll explain that in a second. So I'm not here to sell people stuff or try to get you to buy stuff. I'm here to help people. I toured the world as the world piano man, and all I want to do is help people. All right? That's what we do, okay? And I go live all day, every day to prove that. No point just saying something. I do it with my actions by going live all day, every day. So let me answer a few questions. I'm going to answer all the questions in the chat. No one gets left behind. No one gets missed. So please, here we go. The first one came from one of my oldest friends. This was Mike. He's been a member now for 4 years. And Mike said, if you say you don't want us to follow you, then why are you trying to get us to upgrade to Electrum or Discord just to see what you're trading? Now, I want to be absolutely clear of what this is. Don't do what I say, do what I do. Okay? So I made the pledge 4 years ago when we had memberships to be the best value memberships on YouTube TV, never increase the price, never increase with inflation either. So every year, the very base level memberships, the bronze, then it was silver, and so it goes on up. Nothing has ever been taken away. You're always getting more. I always add more services. I go live more. I now have 4 broadcasters on the channel, myself included in that 4, with Casey, Sensei, and Vaz. There'll be more. I may be up to 10 broadcasters. We're bringing you more lives, more membership videos, more interviews, more things all the time. Nothing ever gets taken away. I'm not trying to get you to upgrade your membership. If you wish to do so, you can. You don't have to. You can watch for free. Anyone can watch the shows for free, okay? But because we're growing and growing and growing, I have a choice. I could start to increase prices and people would still stay and they'd still pay and I'd make more money. I don't do that. I choose not to do that. I choose to add new levels. That way, the people with their original memberships don't have to pay more. They get more, and it doesn't even go up with inflation, right? Now, the reason why I say it's in Electrum members, because I can't physically reply to everybody and provide a personal service to everybody. It's impossible. We've now got 109,000 subscribers, but that's what I want. And I'm still talking to you individually. It's still a one-on-one real service. That's what this channel is about. So what businesses would normally do in this situation, the supply and demand rule would come in and they'd go, you've got all these people, increase prices, supply and demand. You make more money and those some would stay, some would fall off, but you'd make more money. I choose not to do that, Mike. I choose not to do that. So I give new services with extra benefits, but the ones that were here before don't pay any more, including inflation, and you get more as well. But I can't include everything for everybody on every level, because if I did that, I'd have to increase the price to $100. Because it would be insane. I'd have to employ people to answer questions, to do all the different things for people. So I couldn't do it. So this is the fairest way to do it. And I'm the only person who does this. Everybody increases prices. At the very minimum, with inflation, I don't even do that, and I add more. So for anyone who's a member, like Mike, an original member, why are you asking us to follow you? First of all, I'm not asking you to follow me. I'm simply sharing with you my trades, the things that I am doing. I'm consistently winning. I have great connections. I share it with everybody, and everybody wants it. Everybody wants to be a member. We have the highest engagement rate of any channel in the world. Way more than Mr. Beast. 98% of our live viewers are members, of our regular viewers. It's insane. It's amazing. It's fantastic. So I don't keep making more profit. I add more. I never increase prices, and I never increase with inflation ever, and I never will. So how do I cope with it? I have to add new levels, providing other services. Otherwise, I'd have to make it for everybody and then put the price up. And I don't do that. So I'm here to help people. And I know some people that were here when it was one person watching have fallen away. And it really upsets me that they have. People get jealous. They get frustrated. They don't like when people super chat me. They don't like when people support the show because it makes money. I see it more and more every day. But unlike Meet Kevin going out and buying 2 planes, I put everything back into the show and I'm live all day to help people. So I hope that answers your question. I really do. I'm here for you, Mike. You're my friend. And you know, at the end of the day, all the trades I do live on the show anyway. So you see what I'm doing. All I'm doing is telling my Electrum members and Discord members what my trades are before I make them. That's it. That's it. So I can answer those questions and filter that down a little bit so there's less people in there. That's all I'm trying to do. So on that note, let me just tell you, if you want to follow me on X and Instagram, I share my trades when I've done them, not before. There is X and Instagram. Follow me there. I share with you my sources, information, and so on and so forth. If you want Discord and you want my trades before I make them, my limit orders, my buy orders, what I'm thinking, there is Discord in the chat. I've just dropped it in the chat for you. Let me make sure it popped up. Did it pop up? Why can I not see it? Why is Discord not showing up? Am I still live? Hang on a minute. Why isn't that showing up? Or what's going on? Is that not going in the chat? Where's that going to? Where's that going to? Hang on. Why isn't that coming in the chat? I'm dropping that in. I've no bloody idea. Oh, it's showing on. Hey, it's showing on Sensei. What the heck? That's weird. Oh, it's because Sensei's gone live after me. Oh, bugger it. Okay, so I can't do it the old fact. Yeah, it's because Sensei's just gone live after me. All right, okay. So let me try that again. I'll give you the Discord link. Sorry about that. Sorry, I've just been creating chaos in the channel. Here's Discord. All right. So here's Discord. Let me just drop this in for you. Now, I'm also make it $2.99, the cheapest humanly possible. You can't make Discord less. Everybody else charges hundreds of dollars for this service. I do it for $2.99. Now, when you click on it, please read it. You can join the server for free, but you see nothing. All you get is the welcome screen, and I say to you, you need to subscribe because I can't have 1 million people joining. I can't provide a one-on-one service. I'm not trying to sell you stuff, all right? So you can click this if you want to. You come in, and I just say, You need to upgrade if you want the personal service, right? Which is there, $2.99. All right, enough said. If you want to become a member of the channel, my buttons aren't working, so I'm going to do it manually. If you want to become a member of the channel, upgrade to Discord, upgrade to Electrum, and you get all my trades plus many, many more perks, free analysis of stocks and all that kind of stuff. Let me just give you my membership link. Here we go. Here it is. All right, let me drop that in the chat. All right, now then, what's next? I want to go to, I hope that answered the question. We're going to go to Sensei in a moment. It'll be right. Okay, I'm just talking to Sensei as well. There's loads going on at once. So now I'm going to go to questions. Now, obviously, there's a lot of people in the show today. So what I'm going to do is go to members only. All right. So I can answer everyone's question. This is everybody, all members. I will answer and speak to everybody. All right. So what I'm going to do now is go to members. Mike, did that make sense? Mike, did that make sense to you? Let me go to members only. Right. Now then, if you've missed your question and you'd like to repeat it, please now ask it again. All right. Please now ask your question again and I will answer it. Everybody, Mike is in the chat. So Mike, did that make sense? Did you understand what I was saying? Please tell me that made sense. I want to make sense. I want to make sure that you understood my answer. You don't have to agree with me, of course, but I want you to at least know what I said. All right, so let me go to members only and answer. So here we go. It says you have been sent an invite by Martyn, but address not recognized. Says you've been sent an invite by Martyn, but address not. All right, I'm a bronze member. Do I pay the Discord too? You can choose to be whatever you want. You don't have to be on Discord if you don't want my personal service. I answer everyone's questions. I go live and do video calls and all sorts of stuff. I provide that for $2.99, right? You don't have to be a member on Discord. You don't have to be a member on YouTube. You can watch all the shows apart from the members only live streams. All right. Let's be respectful. Mike is the first and the most original member of this channel. He was here every day with Martyn. Oh my God. Yeah. Is anybody having a go at Mike? Is anyone having a go at my mate Mike? I really hope not, because Mike is my dearest friend on this channel. He was here from day one when I was talking to nobody. Please do not attack Mike. I know new people are coming in now thinking, oh, Mike says this, Mike says that. You don't know who Mike is. Mike is a great friend of mine. All right? We've supported his lady when she was in hospital. We raised some money for him and sent him chocolates and teddy bears. He's our mate. He's my mate, all right? So let's all be respectful. He was here every day with Martyn, building the community. He only asked a genuine question. Oh my gosh, what happened in the chat? Thank you for your understanding. Thank you, Vaz. I'm going to open up the phone line. I want Mike to call in. I want all my mates to call in. I want to make certain that no one is left behind. Here is the live phone in. Here is the live phone in. Live phone in. There is the live phone in. There it is. Live phone in, everybody. Replace. There you go. Anyone can call in. Well, members, of course. We don't want bots and trolls coming in to swear. But yeah, there you go. That's right, Vaz. There he is. That's right. I think Mike's okay. He's a tough bloke, but I know he'll be okay. But I want to check. I want to make sure. Big, beautiful tariffs. Yes, we're talking about that in a moment. Mike, Vaz. Mike, poor man, rich man. Love for Mike. Sensei is live. I know he is. Sorry, Mike. I apologize. No, that's it. That's what we want. That's what we want. I apologize all the time. I'll have a go at someone and find out that's not what they meant. They weren't a troll. They made a mistake. Diesel Raider, that's what this show's all about. Apologize. That's right. I don't know what you said. I've no idea. I didn't see it. But at the end of the day, we're here to support each other. We make mistakes. We apologize. We explain it. We all know. Martyn, are you bullish on Bank of America stock? I wouldn't buy a Bank of America stock individually. The finance sector is great, and I want it with Ripple. That's why I want to buy Ripple Bank as an accredited investor. But actually, for me, I'm more interested in buying the S&P for the overall exposure to banks. All right. We got another new member that just joined. Thank you very much indeed. Lots of new members today. Good stuff, Martin. Thank you. Mike, number one. Absolutely. I want to ask a question. Which tariff rule against Trump? In a few moments, Sensei is going to cover it live. He's live right now. I'm going to send you there in a second. Did the call mention Ripple or XRP? They mentioned stable coins. Yes. Did the call mention Ripple stable coins? Come on, Martin, Stephen. Just upgraded membership. Thank you. Mike, 3 years in a row, 4 years now. XRP was not mentioned in the call, but stable coins was. It will happen. Mike is, and you want to be there because the moment it does, you saw what happened. Mike is also Martin's good friend and a friend of most of our members. Stable coins was mentioned. I did not listen to Martin. Stayed with orders and now in the negative. So smart to have done what he did. Thank you so much indeed. All of my limit orders, all my positions are shared on my Electra members, and you get one-on-one service, and you get the video calls as well in Discord. All of this stuff I provide. Mike the GOAT, yes, sending love to Mike. Please come back to me, Mike, and let me know you are okay. It's important to me. Yes, leave Mike alone. Big Mike, Vaz is dope, says the gaming. Good question, Mike. Good question. Now you understand it though, right? Okay, respect to Mike. Stephen, friends can ask each other honest questions. Yes, they can. Vaz is the next Mother Teresa. About XRP, I have to go to... Nobody want to call in? Sorry to get confused, but the news I don't understand so well. Liz, it's okay. Good job. Let's be better than the other channel. Other channels. That's right. Happy birthday again. Poor man, rich man. Join me on Friday for your birthday party then. Bitcoin on the move. Yes, it is. Crypto is on the move. There's XRP. This is no surprise, is it? No surprise. Be it Mike or anyone else, everyone has the right to ask, and Martin knows how to address each question. Agreement or disagreement is a choice of sure, for sure. Pure democratic channel. Thank you. Martin, I was defending you and apologize to Mike. Thank you, Mike. Diesel Raider. I don't know what you said, but I appreciate it. It's fine. Absolutely fine. Zach, thank you. Hello, shalom, says Zach. Says Liz. That's because we're crashing the market, crypto, and then Clarity Act. Yes. Thank you so much. Right, Mike didn't come back to me. Okay, so what I'm going to do now is I am going to send you all now to Sensei. I'm going to send you all now to Sensei. Sensei is live now with the tariff news with Trump. So nobody wanted to call in. You had the chance. I'm really sad that I didn't hear from Mike. I hope he liked the answer. I don't know what more to say. As we grow, things will evolve. Life is about growing and evolving. Things never last forever. I hope my friendship lasts forever with Mike, but I have to do what's right. I keep moving forward, and I hope Mike understands, and I'm really sad he didn't come back to me, but there we go. Live now with Sensei. Here we go. There is the link in the chat. All right, I'll pin it to the top. Pin that to the top. We're going there now. I'm going to make certain that it's sent to Sensei. I could carry on. I've got loads of people watching, but I want to provide you with the best service. What's right for the channel is the best thing to do. Customize that. Sensei is live. Yes. All right, folks. Okay. Right. Okay. Let me make sure I've got that. Sensei's got 4 minutes. So what I'm going to do, I'm going to quickly jump in and see if I can call into Sensei's show just for a little bit of a laugh. How many newsletters? Sensei Opus, Sensei call in. There it is. Right. I want to do this. Let me see if I can do this on the show. Join. Let me see if I can do this, and I'll send you all over. Okay. Oh, there we go.
We have Martyn on the show.
How are you, mate? How are you? Are you good?
Yeah, I'm good. How are you?
I'm brilliant, mate. I'm bloody brilliant. It's what a day. The moment they mentioned Ripple, boom, there it was again. My sources, solid from Bank of America, solid. Sensei, we're going to hand everyone over to you now. You've got a great story. Trump's tariffs. Am I still coming through all right? Yeah, I think I am. Trump's tariffs. I'm sure you got some great news there. I've got 600 people still with me. I'm about to send them to you. Have a wonderful show, everybody, with Sensei. How long are you live for, Sensei?
Well, we're going to wait and see if the tariff decision comes in the next couple of minutes, and then we'll go live once everyone's questions. Anything about XRP, so we'll stay live for a little while.
Spot on. Have a great show. Thank you, Sensei, for everything you do. Just a little bit of a thing between me and Sensei, Vaz and Casey, the team. We just passed 100,000 views in 48 hours. It's one of our records, and our subscribers on a record today as well. So thank all of you, all members, all subscribers, all viewers. Now enjoy. XRP is rallying. All it took was a mention. Imagine the day when they say XRP. Anyway, Sensei, I'll hand it back to you. Thank you very much. I'll send everyone over to you now. Have a great show. Cheers, mate.
Thank you very much.
There we go.
Okay, look, this is exciting. We're going to get everyone.
So there we go. We're now going to send everyone to the show. Thank you so much indeed, folks. That's it. I'm out of here. Have a wonderful day with Sensei. Be good. Behave yourselves. The link's in the chat. It'll take you there automatically. Click on it. Do whatever you like. I'll see you back later. I'm going to hand you now over to Sensei. Have a great afternoon. Till next time, as always, take care of yourselves and each other. I told you so. I'm beating the market again. Ta-ra.